everyone. Thanks for hanging in there on a long day of exciting stuff. And we're going to try to leave you with something even more exciting to take away from today. So on this panel, are you okay? Did I break it? Okay. How about if I hold it?
If you want, I can give you a handheld. You want to do that?
Yeah, let's do that.
What do you want in the lab?
The lab is good. If we can do it quickly. All right, so while he's doing that, guys, so let me introduce the panel. We have, starting with, on my right, Joe Lang from R3, which is a consortium of banks, for those of you who don't know. They actually manage 46, right, Joe? Banks? 48 banks. And they are actively creating, thank you, actively creating, can you hear me? Hey, you guys.
This is when you need to have incentivization.
That's right. Pay him to shut up. So, right. So Joe Lang, that's really hot. That's pretty loud. From R3 CEV, like I said, 48 banks. They actually are providing a lot of different services, mostly exploratory and creating products for banks. I think probably the hardest job for Joe is getting 48 banks to talk to each other. Dan Opre it's Opre. So he's from Digital Asset Holdings, another consortium, a different kind of consortium that is actively acquiring blockchain companies in the space and doing really amazing work like reimagining the Australian Stock Exchange on blockchain and other interesting products. Reggie Middleton. Reggie is the founder and CEO of Veritseums, which is part of the Agentic Group consortium. We have 33 companies actually at Agentic Group, and we do a lot of consulting and building in the space. One of our projects is the blockchain consultant to the country of Luxembourg, to the Rotterdam port, and other applications like that. But Reggie's part of our group, and Veritseums is a trading platform using Bitcoin Rails. It's a pretty amazing product if you're into that. Lawrence Orosani. Lawrence is coming from, I have to look at the thing. Oh, energy, right, I went to that website. That's a really nice website, by the way. So he's in the energy space, and there's a lot of energy around the energy space with blockchain. If you think about securitization of energy assets, I'm sure that's where you're headed, right?
We're actually looking to run utility grids across the blockchain.
There you go.
A little bit deeper than that.
A little bit deeper than that, absolutely. And Greg Simon, who was here earlier talking about Loyyal. Greg's also actually a part of our consortium, but Loyyal is a great, great company. I have always believed in the assets for loyalty points through the blockchain. It was where some of this had to go. And we're going to talk a little bit about what the future is going to look like 10, 15 years from now when you take a look at all of these amazing works that are in progress, what they look like. What will the world look like with a multiplicity of assets when people can trade from their cell phones, instantaneously? What does that do to 2.7 unbanked people who have a sub $5 smartphone? Where are we going with all of this? So let me just first give everyone a chance on the panel to quickly, if you guys don't mind, in a couple of sentences, say in your own words what you do, and then I'll start asking some questions. Joe, you want to start?
My name is Joe Lang. I'm a director of R3's Global Collaborative Labs. You might have read about.
Oh, sorry. What? She speak. Yeah.
Director of R3's Global Collaborative Labs. You may have read about the experiment with 40 banks, 5 ledgers, issuing, trading, and redeeming commercial paper. That was us. Since then, we've kicked off a ton of work and are looking at putting together projects with our members, having them work together to, build something great or some things great. Since we've got
right.
48 members to work with, so they all have about 8,000 ideas.
and none of them want to give anyone the credit for anything.
I'm Dan Opre. I'm the Chief Marketing Officer at Digital Asset Holdings. We're a small blockchain startup in New York focused on building solutions on top of distributed ledger technology generally. We're working with, as Rik mentioned, the Australian Securities Exchange to revamp their post-trade clearing and settlement system for cash equities working on a POC with the DTCC around repurchase agreements, US Treasury repo. So we're really focused on the solution part of the space.
Hello, my name is Reggie Middleton. We're a very, very small startup in New York, and we do peer-to-peer counterparty risk-free trading, basically digital swaps through the blockchain. We are trying to reimagine capital markets. Currently, capital markets are hub and spoke, centralized exchange, and providers around it. We are looking to have hedge fund A trade directly with hedge fund B without the intermediary, which would be JP Morgan, Goldman Sachs, etc. And we're aggregating, I guess, a consortium of buy-side entities, family offices, hedge funds, etc., with the prerequisite that they trade directly using our product. And we were fairly early in the space. I think December 2013, we cleared our first swap, and we're looking to make this a different world.
Mm-hmm.
So LO3 Energy is focused on decentralized energy, so energy economy of the future. Some interesting things are happening in the energy world. I don't know if you've been watching, but PV plants at scale are now cheaper than coal to put into the ground. So that's a bit of a shift. 1% of the planet's energy is being produced by renewables today. 50% of that's going to be distributed. We're putting together business models around microgrids so that there is community engagement and ownership, some of the asset management pieces you were talking about, and a transactive platform that allows the efficient transaction of energy peer-to-peer. So, same cost for transacting a 500 megawatt power plant versus one panel.
Mm-hmm.
I've already introduced myself, so I'll go quick. I'm Greg Simon. I'm the CEO and co-founder of Loyyal. We're taking blockchain and smart contract technology to reinvent the loyalty industry and beyond that into general behavior incentivization.
Okay, thanks. I think the common thread with this panel is you may have noticed energy as a on the blockchain it produces a series of assets, right? Cryptographic assets, and I think that's what's happening in common here. I think you're working more with Rails, right? Or are you all over the map right now?
It depends what part of the business you're in. As part of the lab, basically what we do is we take the work that's being done both within R3 and with the banks and with other startups. We're always looking to partner with the most promising to literally find different ways that we can kick the crap out of them so that when they actually go to production, they're ready and safe.
Mm-hmm. Okay. So what does the world look like though in an era where you have energy, that you have these economies of one, people working around with a multiplicity of currencies, trading back and forth, and using their energy credits for other things. So why don't maybe if you can sort of tell us what that looks like, and Greg, if you would follow that with Loyyal's piece in that, as you see it, I think it'll be a pretty good idea of where we're headed in one vein. So
the models we're looking at really allow a different sort of asset ownership for energy. Not only generation, but also the transmission and distribution products as well. And blockchain is a really efficient way to allow institutional investors come side by side with community investors, micro investment alongside that large macro investment, to put assets into the ground and create a new utility system. This system, because it is running across the blockchain, it's very effective and efficient at counting electrons, things that are produced, things that are consumed, things that aren't consumed, and efficiently transacting those things. So in the future, you have a lot more options, not just buying electricity from a gas-fired power plant that's somewhere within 500 miles of your house, but buying power from your neighbor across the street, or from a community-sided solar plant or wind plant or combined heat and power plant that's funded with some innovative new ways of bringing capital to bear.
yeah, and one of those new ways actually ties into Loyal's business model.
Yeah, so the thing I love about my company is we help everyone else's company to perform better because we allow them to incentivize their target behavior in a more effective way. And in our company, we sort of have this joke that we all see the world in like incentivization matrix code, right? So every time I see something, oh, how can we optimize that? And energy is super exciting because there's a limited supply, and we want to be more energy. We want to conserve it more. When I hear about what Lawrence says about having the transparency to energy usage, it's fantastic because we can see where the inefficiency lies, but it doesn't give you the incentivization to remove the inefficiency. Pinpointing it is critical, and once Lawrence's company can pinpoint that, then what we can do is say, okay, what if you have a smart air conditioner, and when you're at work, we could incentivize that air conditioner to raise the temperature 5 degrees. Don't even tell the human it's going on, right? And by the time they come back home, you bring it back down, and they didn't know anything, the difference. And whatever the air conditioner wants, we'll give as a reward. We haven't figured that out yet. Maybe free on or something. But the point is, you can incentivize anything, and so we can help his company do better by improving the efficiency of the electricity grid that he has mapped out with his blockchain.
Yeah, that's a really exciting thing. I think the blockchain, one of the things that we're going to see almost immediately is that it illuminates and extrudes value out of transactions that normally, or out of interactions now becoming transactions. It's creating a transactional matrix that didn't exist before. So in that light, I mean, Dan, in your findings, I mean, what will an IPO look like on a blockchain stock exchange 15 years from now?
So we're actually working on the post-trade part of the process. So the trades have already been executed on a centralized exchange in the same traditional manner as they have been today. We don't see that changing.
So what would be the benefits of the post-trade ledger?
It's a lot in the sort of cost savings of the reconciliation process and the settlement latency that comes from that after a trade's actually matched or executed and matched and passed to the back office system. So it's keeping all the various different parties to those security settlement in sync so that everyone can see the same thing, and then giving more flexibility and options to how you settle that, whether you want to go to T0, which most people don't, but there may be a time where people want to settle T1, T+2, and if both parties agree, then you can create some optionality in there.
Okay. Reggie, so speaking of trading then, there's some barriers to get to where you are in the space, like to use your platform seamlessly. I mean, people need to have ubiquitous connectivity, they need to have wallets, they need to have all kinds of things to be able to maximize your platform. So what does that look like in 10 to 15 years when people are starting to do this sort of as de rigueur, as earning extra money on the side or full-time jobs or whatever?
Well, I'll give a progression. What it should look like within, say, 3 to 6 months would be applications that are seamless. Google's I.O. just announced bits of pieces of applications. If you go up and pull up your digital wallet, your phone, Android phone to pay a meter, a small bit of the payment application will load itself instantaneously, pay the meter, and then uninstall itself seamlessly, so you wouldn't even notice it. We're building web pages that contain the entire assets of the transaction in the web page, fully encrypted. These web pages load like any other web page. So basically, you take what used to be a centralized wallet or a bank account or brokerage account, which I'm going to call a centralized wallet. You have full connection, full ownership of it on your web page, on your device, and it works seamlessly. Going towards the future, now these web pages are to become more ubiquitous. So you don't need a laptop, you don't need a tablet, you don't even need a cell phone. These assets can be held in almost anything that has a chip. Google Glass, they could be your new glasses, they could be chips on jewelry, they can be clothing. So to bring this next step further, let's say 3 years from now, they could be embedded within your OS system in your car, whether it's an Apple Car OS or an Android OS or Veritseums OS. You're driving a car down the highway, you're an executive, crowded, going down Broadway, trying to get downtown to Wall Street. You're on the FDR or Broadway. You actually bid through your card system. You offer, say, $5 to the person in front of you to move over, okay? And for 40 cars in front of you, you bid $5. The cars say, well, I'll do it for $6. So for 6 times 40, $240, you've actually cleared a path to get downtown. You exchange value seamlessly, right, through what used to be a web page, now is built into your car, built into your clothing, your jewelry. They actually move through the traffic. You receive the value that you wanted. The cars in front of you receive the value that they wanted because it was worth $6 to them to move over to let you go one space. So as you progress in the future, the mechanism will change and the actual wallet changes in form and function. Okay, it changes in form by being lighter weight from centralized wallets, which are banks, to decentralized wallets, which are wallets that sit in your phone, etc., to being embedded within the Internet of Things, a car, a refrigerator, etc.
So cars negotiating. I think we had some people sort of react to that in the audience. That's actually, that's a pretty good use case. Maybe 15 years from now, maybe 20 years from now. But yeah, it'll happen for sure. So Joe, I mean, on that note, what is, if you can say, the most disruptive or the most exciting to you project that you guys are working on right now?
Well, Corda is pretty cool, but it's more about, it's still a big investigative mission, particularly in the lab. That's why I'm a research nerd, so that's why it was a great fit for me. I kind of want to take a step back, though. We're talking about the blockchain. First of all, I think it's a bit broader than that. I think when we start talking about the blockchain, we're narrowing ourselves down to certain capabilities. I think it's really about distributed encrypted information and being able to organize it. I mean, for the most part, even cat funds movement, it's really book entry. It's information management and making sure that the assets or the obligations are owned and that is rightly documented and authoritative. So a lot of what we're doing is kind of going back to basics and seeing, like, just kind of taking a step back and taking our members through that process of kind of like, it's not about the blockchain that can make you breakfast in the morning. It's about, let's just understand fundamentally kind of, if we're going to rebuild banking to a certain extent, we might as well really start from the beginning rather than trying to fit a square peg in a round hole.
Yeah, that's a really good point. I mean, this is a wave of newness that doesn't necessarily translate well into traditional molds, right? So that being said, I'm just curious as to the way that all of these things work together. I mean, so you didn't answer my question, but that's okay. How about, anybody have anything to say about blockchain on a chip? You mentioned chips, and I keep hearing this more and more about blockchain being on a chip. Are you guys working on that?
No.
No?
I'm not.
Yes,
Okay.
We're working on that a little bit.
You are? Okay. Because that is a big evolutionary step in this.
Sure. So some of the intelligent devices of the future will actually have blockchain.
Can you speak a little bit more to it?
Yeah. So some of the intelligent devices of the future, specifically related to utilities, because these are devices that need to transact peer-to-peer. And we're not talking about trading money. We're talking about trading electrons. There's a way that this has to work, that isn't exposed to all the financial intricacies of those markets. But embedding this technology into these devices actually creates a pretty secure network for a utility grid to work across. And it also allows these things to be locationally aware of what they're supposed to do in the network and their costs and values in the network. So it's a really interesting way to sort of drive down, to the locational value of devices themselves. And we're hearing lots of interest in the IoT space of doing this as well, actually embedding these things into devices themselves.
And what were you going to say?
It's Intel participated in our Project Genesis, which was the 40 banks. So we through that we have had some exposure. We are focused though on the actual, there's a lot to be said potentially for security, but again, it's about going back to basics. And to answer your question, the ones that I get the most excited about are the ones where we're working with not just our members, but the regulators who have been extremely supportive. And in fact, I have been in a meeting where a central bank actually told the members in the room to start to think bigger and to not be constrained by what exists today, which was pretty amazing to hear. And also it was a green light for us to keep pushing forward.
That sounds good. Central banks are wise. They're getting wise. There's a group that used to own all of the IP for printing money, for printing bills, that now has sold their entire stake in that old technology and is only doing blockchain, having blockchain talks with central banks, including the Bank of England Japan just said Bitcoin is money, so they're next. Ukraine, Tunisia. Tunisia's fiat is on the blockchain, right? So they are, which is kind of wild when you think about it. But so I want to ask each panelist. So I already asked you, what do you find, Dan, to be the most disruptive thing that you're doing from just the standpoint of making everyone crazy?
Not a lot to don't make everyone crazy. In fact, we're probably one of the more boring ones on the panel in that we're trying to improve existing processes, work with incumbents to improve their existing systems, save money, speed things up. So this is relatively not quite as exciting in terms of the 15-year time horizon, but it's a real burning need that many, if not all, institutions face right now. This is back office systems that are 20 years old or haven't been updated since the 60s and are written in COBOL. So there's a lot of need to replace all these systems. It's not that sexy, but it's a big market. So
Written in COBOL.
Very old, yeah.
That's insane. Anyway.
Three-man race.
It's crazy. So anyway, Reggie, so what are you making better? And what kind of world do you see? Who are you disrupting? Who are you trying to kill?
Okay. Well, we're not trying to kill anything. I want to put a disclaimer out. When Noah comes and says it's going to rain, don't attack him. Build a boat. Okay? We're building a boat. We're disrupting the intermediator that doesn't add value. There's an economic term called rent seeking. And basically, a rent seeker is someone who charges economic rent, charges a price, but does not give the economic value for the requisite price that they charge. As we see it currently, that is the banking industry, the Wall Street industry. So we serve to disintermediate those entities, not all banks, but those intermediaries who do not give the requisite value for the prices that they charge. So as of right now, our prototype, that proof of concept MVP that's been running for 3 years, allows any entities to trade value, not just financial instruments, but value peer-to-peer. That means that you can trade the value of IBM stock with her in exchange for US dollars instantaneously, with no counterparty risk. You don't have to know who she is. You don't have to worry about her paying. It's guaranteed that they will pay through a smart contract and never touch New York Stock Exchange, NASDAQ, JP Morgan, Morgan Stanley, or anybody else. That's a sea change. That is an actual invention. Interestingly enough, that forces the banks that profit from transactions to either step up their game and add value or leave the game. Now, this is not anti-bank. This is progress. It's the same thing that happened when the internet came to the media industry. The banking industry has been protected by regulations and by technology that didn't address the matter of risk, the Byzantine General Syndrome, which is a technical way of saying A can't trust B if B's on the other side of the world using digital money. So now you have the technology to do that, and if you disintermediate those who don't add value, you drop costs for everybody. So that means that 9-year-old girl in Sri Lanka, a mathematical genius, can actually trade with the prop decks of Goldman Sachs and potentially win.
Yeah.
So the survival of the fittest from a cognitive perspective.
There's a much purer capitalism, actually.
Yes, capitalism in its purest essence.
So I think a common thread that you may have noticed throughout these guests speaking is that there are a lot of inefficiencies in finance, a lot of inefficiencies in banking, of course, a lot of inefficiencies everywhere, and there are whole industries comprised of companies that address inefficiencies. Sometimes they're bigger. The companies that address the inefficiencies are bigger than the actual sectors themselves that they're trying to address, like ACH, say. But that being said, yeah, I know that would get you. Anyway, I'm going to speak for a company that's not here called Blockchain Health in San Francisco. We'll talk about a disruptor. You have a lot of things converging in the space, in the health space, obviously, everyone knows. But one you may not be aware of is that there are companies like Sanofi, Merck, et cetera, Pfizer, who are attempting to copyright and create IP through genomic sequences, right? So genomic strains. They want to own the way your DNA looks, works, and acts. each one of you. So one thing we haven't talked about as being a disruptor here is the permission society. And it's incumbent upon all of us, I think. What this company wants to do, called Blockchain Health, is put all of your genomic information on a blockchain that you own personally on a device of some kind. And that way, you could actually make money with Pfizer and Sanofi and these people by allowing them to use and run tests with your genomic string if they want that kind. You have a certain marker, and then but be private behind that wall. So you have a permissioned environment where you can actually say, yes, you can use this part of my genomic string to test with, and then it's like a licensing agreement that lives on the blockchain through a smart contract. But that kind of thing is happening in energy as well. This permissioned environment that you're talking about. So that if you look at how the blockchain would work, it's a ledger, yes, but it allows for things to happen that needed a lot of intermediation previously. It cuts all of that out of it. And I think that's the biggest disruptive quality of the blockchain itself, besides being a hell of a ledger, which it certainly is. It's an immutable ledger for those of you who don't know. So let's go to, Greg, I want to ask you about what the future might look like to preface my question to you. Most people here should know that before the Civil War, there were 10,000 plus currencies in the US, right? So there were municipal currencies, there were bank currencies, there were, all kinds of different state currencies. The greenback being a debt instrument to the North for winning the war. So we're going back, it seems, to this, a globalized version of that, where we'll have a multiplicity of these currencies, either thrown off by energy, thrown off by supply chain, thrown off by banks, and then central banks as well. They're not going anywhere. And then through loyalty points, which will become a lot more fungible of an asset as a result of all of this. So what can you tell us about what that might look like, that world?
So before I became a blockchain startup CEO, I worked in banking, or the dark side, like I like to call it. And my motivation with blockchain was the empowerment of individuals, particularly banking and the unbanked, the ability for any human, no matter who you are or where you are, to have control over your value. Bitcoin is kind of that, but it's not taking it further enough. You need to have the ability to effectively be your own central bank. I own my brand. My brand is my value. So where I see us going is the demonetization of the storage and transfer of money. It's basically free. People say blockchain is great, but you can't monetize the consensus layer. Anybody can download it, it's free. What blockchain has done already is the storage and movement of value is now profitless. Banks, I see banks going the route of what Kodak did, right? Kodak thought they were in the business of making paper and chemicals, but really they were in the business of storing memories. Banks think they're in the business of storing value and moving value, but they're not. They're in the business of helping us to transfer that value to experiences that we value, but they don't know that yet. So I think what happens is by the demonetization of currency and the movement of value, we're going to see individuals issuing their own branded currencies, a proliferation of these currencies, and no one knows what will happen, but it's that empowerment of the individual, the shifting of power to the person away from the centralization, I think is going to be the most exciting part of this.
Okay, so I'm going to ask Joe, the pragmatist, what's your reaction to that? Because you deal with banks, specifically. So.
I do. And I also deal with startups, and I deal with regulators. And I've been on both sides, as much as I think that a lot of the processes that we have to go through to work with a bank are onerous, they're not all insane, and I actually like the fact that it's somewhat regulated. I might be the only one here that will admit that, because it's somewhat, of a dirty word to say regulation might be helpful. So that's the first reaction. The second thing is, it's not just about currencies or moving money. It's about, when you represent an asset, it's really a data field. So it's about making information more accessible to the right people. It's about getting to the right people. I mean, I do work with, a foundation in South Africa that is looking at financial inclusion using mobile and using and financial education for young women. And looking at how distributed networks can help that. But in and of itself, the goal isn't to make it so that they can trade with a Goldman Sachs trader, because I don't think that would be a very fair fight. So I think there's that, and I think that we're kind of, and also to the point about the banks, I just want to also clarify something. Cash payments was the hottest thing in 2015. It's not the route to go. It's already a super efficient system. Yes, the consumer experience has a lot to be desired, but in terms of a bank and actually how they move their funds, which is really where the money is for them and the volume, that's actually super efficient. However, and that's only a small part, where they're really there for is lending to businesses, to consumers, maybe taking too many bets in some cases, but at the same time creating that economy so that other individuals, other companies can get the funds they need to get started, and to, I mean, think of all the VC money that's been pouring into all of our companies. They're lending to us, and there's banks that are actually guaranteeing those loans.
Yeah, that's interesting. There's two sort of different takes on that. But I happen to think that, what we believe is that there's going to be a redefinition of the word value. And that trading, I don't think it will be onerous actually in that particular regard, because it won't be an unfair fight. I mean, before the quants got a hold of Wall Street, people traded on the floor. Generally speaking, those people, a lot of those guys were, and they were mostly guys, were high school graduates. Not a lot of them were college graduates. They went into the street early. They learned how to horse trade, and they were generally just bright guys who never went to Harvard. Okay, now I'm banking on out of almost 3 billion people who've never really been to a proper bank or been to a proper college. You're going to find a lot of people who actually pick this up pretty easily and start trading these baskets of assets and go into town. You're going to see wealth, values spring up in very unexpected places. In economies of one, with women selling bananas in Chile on the roadside, becoming millionaires. It's going to happen. This is the world we're building.
On Earth. You have access to the global economy from anywhere.
Because there are a lot of smart horse traders who just aren't educated the way that you might like them to be. But go on, Reggie.
Intellectual capital has no geographic boundaries. It has no demographic
Can't hear you.
appearance. Okay. The intellectual capital has no geographic boundaries or demographic appearance. Geniuses appear everywhere. What limits them is access. Mm-hmm. And so in a peer-to-peer economy, access is ubiquitous.
Yeah, and you will, in this permission society, which has kind of got glossed over when I last said it, but you actually, Greg actually made a point about it as well, is that you're permissioning people to use certain things, either part of your brain capacity or part of your knowledge or physical health information and data. I mean, this is the kind of future that we're talking about, and it doesn't break down into simple transactions, but it creates new value. There's no wealth redistribution here. This is actual value creation over time. It's trillions and trillions of dollars that we just never knew to look at before. We didn't have the mindset. So there's nothing new about a distributed ledger, quite frankly. The blockchain is an amazing distributed ledger, but that's been around. You can use a SQL server for that. It's really more about the conversations that this movement from Bitcoins on has engendered. The way we talk about financial inclusion and technology, the way we talk about this convergence of healthcare, money, communications, content, media content. So I guess, how long have we been going now? About 7 minutes? Thank you. Okay. In that 7 minutes, why don't, I'd love to hear more about the energy. I think that the audience will need to know about that. That's really more low-hanging fruit that's happening kind of right now.
Sure.
Yeah?
So one thing to point out real quickly, what we're doing is not revolutionary, it's evolutionary. So we aren't looking to disrupt. What I said was what we're doing is not revolutionary, it's evolutionary, right? We're not looking to disintermediate necessary components, like utilities that you need in place to run utility grids. The idea is more to take some of that inefficiency out of the market. So to give a little bit of perspective, right now, if you want to participate in a wholesale market across the US, you need to have generation that's pretty substantial size in order to participate. And the reason is that the cost of transacting that energy is actually pretty high. But if you can use a tool like the blockchain to remove that barrier, then, like I said, you can transact the value of a single solar panel versus a 0.5 megawatt solar plant at the same cost. So that means you, as a consumer, can actually install, energy generating technologies on your house and participate in a retail market, not just offset the cost of the electricity that you're producing, but actually sell at a premium to the community around you. And this has been a market that you've been excluded from since there have been utilities, right? Because it's a monopoly market, it's a natural monopoly market, quickly turning into an unnatural monopoly market. So energy is the largest use case for blockchain that I know of on the planet. Nothing runs without energy on the planet. The financial markets don't exist without energy. So in my perspective, we're on the cusp of something very large with blockchain.
We're having the same conversations in Luxembourg, actually, about the energy exchanges in the EU. It's pretty fascinating stuff, actually. Are there any questions from the audience? Yes, ma'am.
I have a couple. One is to do with energy. I understand moving the value around, but physically you need some infrastructure to move energy from house A to house, even if it's just across the street.
Did everyone hear that? She's saying that you have to have some sort of device that's going to move.
So who is paying for that, and where does that come in to the equation?
Sure. So that is a really important point, and that's
a bit of a lot of transmission costs if you're going into community
Yep.
generation.
Let's talk through it just a little bit. And that's why I said that energy is not finance, right? You're not going to trade energy across the planet like you can trade dollars across the planet. There are physical attributes to energy that you need to recognize, and there is a transmission and distribution system that has to be in place in order for you to be able to use those things. So like I said, we're not looking to disintermediate utilities. They have a job. They need to be there. We need those pipes and wires so people can actually transport energy back and forth between themselves until we can figure out a way to do it miraculously without that stuff. So this is about evolving what's happening and allowing for more participation. So utilities right now, if they're a vertically integrated utility, which means they own the transmission and the generation assets, look at their customers as ratepayers, right? They don't even call them customers, they call them ratepayers. You are captured and you will pay them whatever they charge you for the electricity that they put on the grid, subject to what a regulator says. They're just beginning to start to think of customers, our ratepayers, as customers, right? And so their big innovation is we need to provide a new customer experience. When we've got news, customers want to participate, they don't actually want to be customers. So using blockchain technology, and there's a ton of new transactive energy technologies being developed now. There are actually standards in place to run microgrids. So your block or your community could actually separate itself from the larger macro grid if it has enough generation assets and can load balance across this. You could have your own utility grid in your community. The technology exists today.
Yes, sir.
How much attention do you think has been given to the side chain?
How much attention has been given to side chains? Okay, who wants to field that?
Could you define
Can you define that?
sidechain?
Sure. Who wants to grab that one?
Sidechains are a technology developed by Blockstream, a startup in San Francisco, is a way to create alternative chains to the Bitcoin blockchain, which actually have a two-way peg. So you can move Bitcoin from the main Bitcoin blockchain into private permissioned sidechains, creating new assets.
Okay.
So that's one approach to a world where you have multiple different chains. Ripple are also working on the Interledger protocol as well. So there was a lot of attention around sidechains sort of a year ago when it was announced. I've yet to see the sort of, particularly in our world, we don't deal with blockchain, with Bitcoin or the Bitcoin blockchain at all. So in our world, that's not a big requirement. So I think the attention there's gone down quite a lot since it was initially launched.
So from our side, side chains are pretty important. You aren't going to build one blockchain to rule the energy world. You wouldn't build that. That doesn't make sense. You want to recognize physics. If my electron can't make it to you, I can't trade electrons with you, right? So there's a different sort of blockchain application that energy functions on that doesn't look like a Bitcoin network, that doesn't look like a traditional financial network.
It
I'd
would,
also add to that, I think that it's kind of ridiculous to think we would have only one blockchain that fits all of the needs.
Right.
I mean, in my opinion, this market is a trust market where we're consuming trust that's been commoditized, and the blockchain is the interface for us. And everybody consumes that trust in a different way. And to meet those different segments of those market needs, we need to have permissioned, permissionless. For this particular industry, there'll be thousands, if not millions, because each market segment is going to need something just a little bit different. What he needs in industry, energy, what I need in loyalty is probably completely different.
It is.
Right? So we can't do the same thing together.
But they can touch each other.
They can touch
yes,
each
well,
other. That's what we're trying
and
to
they
find
certainly
something
will
touch.
down the line. But
Yeah.
Joe, you wanted to add something, I think, to that.
So I think that it is very possible that down the line we'll be paying for things in all sorts of assets, but I think for the time being, all transactions at some point settle into cash. And so, we have to think about how do we make sure that when that cash is moved, whether it's on a blockchain, some other type of system, our current FedWire system or RTGS, SEPA system, it always has to make sure that it can trust that service. And so a lot of the work that we're doing as well is to make sure what are the requirements of the incoming service, whether it's a ledger or something else, so that I trust it and I will actually act accordingly and therefore move cash so that it's locked and irrevocable. That's
Okay.
always going to be a problem.
Yes, sir.
Well, we really have to separate the discussion of Bitcoin from blockchain, or else it gets extraordinarily confusing and diminishes the real value of blockchain in a number of industries. Because Bitcoin goes to the question of fiat and the fractional reserve currency and managing the money
Thank you.
supply and managing the multiplier. And banks, as bad as everyone wants to make them out to be, and some are, at the same time, they're basically lending off of deposits on a multiple effect. And part of the whole problem we're having in the economy now is compression. All right, so all of a sudden you turn over away from currency systems that are managed to Bitcoin. There's a lot more macro questions that have to be thought through
So
without seeing it as a panacea.
If I can boil that down into a question, it's a good point, by the way. If I can boil it into a question, I think I heard you say, what is, for the audience sake, what's the difference between Bitcoin and blockchain? Where's the separation? Because they're not
Blockchain
always
can
the
use
same.
any currency. Blockchain can use all regular
You can have a
currencies now.
blockchain without Bitcoin. You cannot have Bitcoin without a blockchain. Bitcoin is a blockchain, right?
I'd like to address that. The Bitcoin is a protocol-based platform. Okay, Bitcoin, capital B. Bitcoin, the currency, is simply an application built upon that platform, analogous to the internet with TCP/IP and email, the MX protocol. Email is an application built upon the internet. Bitcoin is a currency program. You can have Bitcoin take the characteristics of anything. Our platform trades 45,000 tickers all through the Bitcoin blockchain. Gold, silver, Facebook equities, indexes, electricity, futures, the whole nine. So it is the oversimplification to say Bitcoin is a currency. Bitcoin is a platform to be developed upon. So with that being said, we are much closer to having utility. As I was in the back, we just had a hedge fund call that's interested in using the platform. 2 weeks ago, we had a press release of a hedge fund trading through the platform, the first hedge fund to do so. So this is actually happening now. What needs to be done is education on a larger scale. So when people hear the word Bitcoin, they're not scared, or when people hear the word blockchain, they have to understand that you need a token to use it. So you can forget Bitcoin because I think it was ruined in the media, but every blockchain service has a token, so it's going to be Bitcoin-like no matter which way you look
Yeah,
at it.
it's a very good chance also we'll just stop saying blockchain at some point,
Right.
and it will be taken for granted.
Can't separate water from moisture, basically.
So maybe even a little bit more simple. When I talk to regulators, energy regulators about blockchain, they immediately go to Bitcoin because it
Yes.
associates blockchain. So the
Yes.
analogy is Bitcoin is to blockchain like Kleenex is to tissue. Right? Blockchain is that underlying
It's a brand.
technology.
It's a brand. You
Bitcoin
think-
is
yeah.
a brand of
Think
blockchain.
of Bitcoin as a Model T Ford and waiting for Ferraris to be built.
Yeah, exactly.
Okay, I think that's a better analogy.
I think there was an economics angle to that as well. So I love talking about this part about blockchain and Bitcoin. So you're right in that Bitcoin has scarcity, and I think your concern was with a scarce currency, it can't adjust in quantity according to demand in society. That is true, but blockchain does not have scarcity, right? You can have an infinite number of blockchains with tokens of value that can meet the market need for money. The problem with having one centrally controlled currency is if there isn't confidence in that, then people won't borrow it. If you have a free market of currencies, then there's competition to have sound money, and the sound money will be borrowed.
That's a really, really good point, Greg. Any other questions? Yes, sir.
We can talk later if you like.
Characterize where tax authorities are with tracking value exchanges, energy.
Where are tax authorities now with tracking value? Okay, anybody take a reg question?
I guess since I'm taking the place of Charlie Cooper, who is our head of regulatory affairs, I think that generally they are looking to understand. We have regulators that are coming into our lab just to understand how an Ethereum network works. Not because they think Ethereum's the answer, but because that's the hot flavor of the month or the year. So they want to understand so that they can have real discussions and real thoughts around it. I think that there's a lot of promise because we talk about auditability, transparency, or controlled transparency. I think that everything is even the regulators that are actively looking and